Hello everyone, this is Riya Singh for the Currency Outlook today. Let's look at the fundamental view for the dollar. So as you can know, there has been quite a downturn that we are witnessing in the US 10-year bond yield. So we'll be talking about the bond yield today as to how it impacts the currency and what is the future outlook, not only with the US dollar but also with the rupee. So looking at the US 10-year bond yield, we are seeing quite a downturn into this. We are witnessing a downturn into the US 10-year bond yield. So why is this happening? So this can be in response to the surging green pandemic news as well as the COVID-19 infections, which is continuing to spike around the world. So the rate market currently is facing what we call as embryonic stage of pricing for the next round of central bank easing that we are looking forward, and this will continue unless there is a downturn in the tail momentum of the COVID-19 cases. Thus, in the near term, a volatile movement can be certainly expected as well as two-way price action, but on a longer term, additional easing of monetary policy can reassure investors that the central bank and the policymakers both are working towards and are having their back, and measures will be put forth to support the same. So that is with the US 10-year bond yield, but we are seeing quite action into the Indian bond yield market as well. Especially, it has come to a light after the OMO operations that we have witnessed last. So, going forward, there has been an expectation from the RBI that it can deploy some form of heavy bond market support like before, while RBI Governor Das is open to trying out unconventional steps, as we know from his past OMO operations decisions that he has taken. And thus, secondary market purchase may well be preferred route of action. So, especially at the time when inflation is structurally low and demand has shrink dramatically, the RBI move to use the secondary market to monetize the debt would likely entice the foreign bond buyers and may be positive for the rupee going forward, because if you see at the last two MO, it did affect the rupee and rupee did appreciate. So the price action in bond markets do show growing expectations for big RBI support, possibly via series of open market operations. RBI is not letting the rupee to appreciate too much and is curbing the wild momentum and volatility constantly on either side. Since the hit of the pandemic situation, it is not letting this, any leg, whether it's appreciation or depreciation, having a wild momentum. So, what road, is ahead with respect to the rupee or the RBI? So, going forth, I think RBI can go for a deeper rate cuts, as we are witnessing our first financial economic contractions since the balance of payment crisis in 1980. So, as far as the forex reserves are good, now we know that our Indian forex reserves have reached a very good levels, but what does it lie for the rupee? Because RBI is constantly building up the reserves, constantly buying the dollars, and in order to guard against any possible contagion arising from the external shocks. But doing so, it is boosting the demand for the dollar on the domestic front, and thus we are seeing that in the rupee momentum, as well as any gains or any appreciation is not sustaining in the rupee. We did saw it coming due to the OMO operations and the inflows from the geo. We did it, coming down and appreciating, but it didn't last there. It didn't even last for a session, and we did see a a possible reversal from there. So I think any of this gains going forward, it will be a rocky road for the rupee on the path of recovery, and with this current scenario, any gains in the rupee will be a very hard to get sustained. So I think on a longer term or for the financial year, we can definitely have a picture of 73 on the lower side for the rupee to appreciate, And anytime it comes down to that level, I think it will be a very good opportunity to go for long into the rupee, because with the current economic contraction situation and the pandemic numbers rising like anything for the India, uh, the lockdown measures that have been taken with respect to the uplifting the lockdown measures, because if you're seeing we are at the rising when these lockdown measures have come forth. So it will definitely not aid into the rupee to sustain those lower levels. So I think on a longer term, it will be a very good opportunity to go long into the pair from those levels. But let's see at the technicals so that we can have a better view for the intraday sessions. Let me just share my screen. So this is a chart of USD INR. We are seeing after a good, appreciation mode, we are seeing a downturn from the same, and rupee in the previous closure have given a close above the short-term moving average, which is a bullish sign for the rupee. So I think if any open above 75.45 will definitely lead the pair towards 75. 50, 75, 70 into the coming sessions. So go for a long above 75.45 and keep a target of 75. 60, 75, 70 for the coming session. If it opens above 75.50 or moves above 75.50, you can even go for a call option for 75.75 for the coming weekly expiry. So these two strategies is definitely that you can go forward to. Also, we are seeing quite a momentum in the euro INR because of the ongoing eurozone discussions and the meetings that have been held, and it is expected that another package will come in, and this will definitely support the momentum of the euro USD into the coming sessions. So I think euro INR will be a very good a strategy to go long, though it is witnessing kind of a sideways contraction and horizontal channel momentum. So I think above 85 25 will be a very good level to go long into this pair, definitely for 85.50, 85.75. So I think it bullish scenario will be in picture for the euro INR as well. So these are the strategies for today. Thank you for joining in.